Lukoil is a company that supplies gasoline to consumers in the New York, New Jersey, and Pennsylvania region. And those gas stations are run, like most, with a franchisee model. But ongoing sanctions by the U.S. against Russia over the Ukraine war is having an impact on those stations, many of which end up being family run. So it's an interesting story of how small business is being impacted by something half a world away and still needs to try and survive. Pleasure to be joined to discuss how they go about this by Serguei Netessine, who is a professor of operations, information, and decisions here at the Wharton School. Sergey, great to catch up with you. How are you, sir?
Very good. Thank you for having me, Dan.
Thank you, sir. Well, like as I said at the top, a lot of these stations are family run. So it has to be quite the challenge being caught in the middle of all of this.
Yes, absolutely. This is a very unfortunate situation where, Lukoil's US footprint was built largely through acquisitions of existing station networks. First, it was Getty stations, and then there was some Exxon Mobile portfolio, followed by gradual rebranding. So today you have local operators running community businesses under a brand whose ownership is a geopolitical flashpoint. So that's what's going on.
What is the relationship then that these local stations have with the larger company? How does that work out?
Well, many of those stations are family run, locally operated businesses cut in the middle, really. They're kind of like a collateral damage because they are franchised locations. And sanctions imposed on Lukoil, they really target ownership and control, but the shock travels straight to family-run franchisees who have really nothing to do with the ownership of the franchise.
Right. And it's important to note that while these stations are from a Russian company, the gasoline, from what I read from these stores, is gas that's refined here in the US, not in Russia. So those people that may have a concern of thinking that they are supporting Russia, that may not necessarily be the case.
That is correct. Yes. So the molecules in the tank may be American, but the reputational risk is about the logo, not the refinery. And this is what a lot of customers see. They see the logo, and the logo is from the Russian company, and that's why they often stop buying gasoline. Even before any sanctions, even above and beyond the effect of the direct sanctions imposed on Lukoil.
And so the financial side of this for the companies is a challenge because they have certain relationships set up in terms of how they can bank, the level of credit, where they can get credit from. And it's a challenge for them right now.
Exactly, Dan. And the problem is that stations depend on credit card payments or debit card payments. And typical franchisee in this business gets something like 85 to 90% of their sales from cards. And cards are controlled by the bank, of course. And when the bank sees a risk, like in this case, a risk of sanctions, is they just stop accepting payments. And so customers come to the station, payments are not accepted. On the other hand, the franchisee agreement corners the owner as well, because when you are in a franchising agreement, you have to use certain equipment, you have to use certain bank, you have to use certain branding. And so these owners cannot even go to a different bank and say, hey, my bank is not accepting payments. Let me go with a different bank. They are squeezed from both sides. There is a compliance risk on one side, and then the contract default risk on the other side. So that's a very, very unfortunate situation.
And so if they wanted to go to another bank just to be able to solve their problems temporarily, what are some of the potential repercussions of doing that?
Well, they would violate potentially rules of the franchising agreement, and that typically means they can get sued by Lukoil, by the parent company itself. I mean, I'm not giving a legal advice here. I
Right.
would definitely want to read their agreement and probably consult with a lawyer and understand how the agreement works. But typically, that's what happens. You would violate rules of the agreement and potentially just lose entire franchising unit that you have.
So then for the company, Lukoil, I guess one of the potential solutions might be if they were to sell their assets to another owner then, correct?
Yes, that would be probably the best solution for everyone. Divestment is kind of a cleanest structural solution I can think of. But the problem is with timelines and approvals that could be slow because of the sanctions, because OFAC explicitly addressed this, and they said that, look, the general license that they give, it authorizes negotiations and all kinds of contingent contracts plus due diligence, but it doesn't authorize the actual sale. So when it comes to
Yeah.
sale, it still has to be approved. So that probably means extra months and months that are going to take place between the agreement is reached and then the approval is gained. So policy wise, the sale is a nice off ramp, but it's a regulated off ramp. So
Right.
it would be a slow off ramp.
But if you did have something like that occur, I would assume most likely that well, I can't assume it, but would there need to be a rebrand of the stores?
Practically, yes. Yeah, I think in most cases, either immediately or a part of the sale. And there are multiple reasons. There is a commercial reason. You want to avoid kind of a customer seeing this sign, and the reputational drag is there. But then there is also compliance, operational reason. So banking and payment partners will be more comfortable, and then there is a contract reason. Usually, rebranding is required as a part of termination of the agreement and sale of assets. So even if the fuel supply would stay the same, most likely, rebranding can be the difference between this political headline and a local corner store, a corner store.
What potentially then is the path that these local store owners need to consider right now? I mean, as you said before, they're kind of stuck in the middle here, and it doesn't feel like they have a lot of options at this moment.
No, unfortunately not. And, they kind of should have seen this coming. I'm frankly surprised that Lukoil wasn't sanctioned earlier. It took so long. The war has been going on for such a long time, and Lukoil is clearly supporting the Russian government in the war. Um, there are a few things you can do. You can try to find redundant payment options. Try to encourage multiple processors to accept payments, for example, and hopefully there are some banks that are not as worried about sanctions. So
Right.
that's kind of in the immediate term to investigate. Then you really wanted transparent customer messaging. I would have everywhere locally owned, employs local staff, fuel supplied through US distribution, and so on, to just help customers understand that this is really has nothing to do, it doesn't have much to do with a Russian company business. This won't solve sanctions, but it can soften this brand avoidance disturbance.
Mhm.
And then you probably want to engage in some trade associations, start talking with each other, and push for practical guidance from OFAC and so on. So then you can engage into some medium term, seek compliance pathways and negotiate some kind of franchising relief. That would involve some kind of a consultations with a lawyer, probably.
How much is this really a story of kind of the nature of how small businesses have to deal with, some very unique situations that may come out of the blue that they may not have expected when they, wanted to be an owner of a business like this?
Yeah, it's unfortunate in this case that the policy goal is to cut off sanctioned cash flows, right? So you want to
Right.
cut off cash flows to Russia, not to wipe out American family businesses, right? Um, of course, I think OFAC realizes a little bit late, and kind of created this solution where they allowed stations still to operate, But then there is still a backlash because customers see the brand, and they kind of perceive it as not a good brand. So there are unfortunately no great solutions right now. Really, this acquisition would be the best. So it should be encouraged. It should be made relatively fast, because this really would be a good outcome for everyone.
Sergey, great to talk to you again. Thanks very much. All the best.
Yeah, thank you, Dan.
You got
Great
it.
to see you as usual.
Absolutely. Sergei Netessine, who is professor of operations, information, and decisions here at the Wharton School.